Hello, everyone. This is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending September 30th, 2022. Markets are in the red again this week, both bonds and equities. So interest rates up quite a bit. So minus 2% on the week for the long index, about minus 21% now year to date. For stocks, negative, a bit less on the TSX after 4 days. Let's see how the markets unfold today on Friday. No direction pre-market. More negative in the US and in emerging markets. Price of oil higher, but the risk-off tone that remains is still a headwind for the Canadian dollar. So it's something that maybe most people don't think about, but the moves in the Canadian dollar are very tightly linked to the risk sentiment in markets in aggregate. So we're still in this bear market, should be in it for a while. So there's reasons to think that, yes, we could have some volatility in the short run, some short-term rebounds, but until we find a definite low for both the markets and the Canadian dollar, maybe that's more 2023 story. Price of gold up on the week 1%, but still negative, close to 10% year to date. So economic data will go roundly about it. Canada's economy continues to be surprisingly resilient. The GDP here is the monthly change in GDP. So we have this data in Canada. In the US, it's always quarterly. Here we have the monthly. Except for January, every single month was positive this year. So surprising resilience. Good news here. Even though we're seeing housing starting to be an issue, even though inflation is taking a bite out of consumer spending power, real wages are contracting, real disposable income is under pressure. We still have positive growth, and this month it was caused by mining and oil. So the trade, commodities, all of that's supporting the Canadian economy. So two things that are favoring the Canadian economy versus the US is the strength of its labor market and the price of commodities and trade. So it's still playing an important role here. So good news for the Canadian economy. Going around the world now in the UK, maybe I'll take a few minutes on this. There was a government tax plan in the UK that was highly criticized this week, criticized by the IMF, among others, so the International Monetary Funds, saying that, well, it's a peculiar situation that you have central banks hiking rates very strongly in order to fight inflation. And the Bank of England has been one of the most vocal and transparent central banks around the world by saying very early that while they're doing this, likely this will be causing a recession. So they weren't hiding from that. Now you have a new government in the UK, and one of the first decisions is this tax plan. They're cutting taxes. They need to borrow money to do that. So it's a very stimulative one. And the IMF, they're saying that, well, first, this will create inflationary pressure. So it's going against the efforts of the central banks. So fiscal is not working with monetary policy. They're working one against the other. And most importantly, they're creating even more inequalities because the chart on the right might be small. So if you want, you can maybe pause this video, and it's the distribution of wealth here. So you have all of the quintiles of the population, and the size of the sticks tells it all. The richer will get most of the benefit from that. It's not really something that does anything to help income inequality. So the question is, well, is this the template that some other governments will be following around the world, or is this just a one-off? So because if we go into a world where Canada, US, other European countries, or the countries around the world, they start to, use fiscal against monetary policy, well, the path that we were on of tightening interest rates, tightening monetary policy, hiking interest rates, slowing the economy down to fight inflation, and then have, a path to a new business cycle, then it's all up in the air and we don't know where we stand. So that added to the confusion or to the risk off sentiment this week, and it's going to be something to follow. So talking about risk off, the US dollar, how high can it go? That's the question. Historically, when the global economy is weakening or is weak, you tend to have the US dollar that is strong. And when the global economy finds its footings and it starts to rebound from low levels or is gaining strength, then you have the US dollar that's weakening. So now the US dollar is gaining strength, accelerating. So the question is, when will that stop and how high can it go? Of course, we don't know exactly where. Probably 2023 is the year where we'll see a pivot from there. We need to see the Federal Reserve start to be more worried about the economic data first, and maybe start hinting that maybe some cuts are coming. So this is not a story for right now, maybe late 2023, or see the global economy starting to find its footing, to bottom, and that could be a story also for 2023. Of course, the recent stories about the European economy being vulnerable to the energy shock through the winter that pushed the euro down. So that's helping US dollar strength. The story in the UK pushed the pound to the lowest level in decades. So this is pushing the US dollar up. So that question is the same as wondering when will the Canadian dollar bottom, and likely it could be volatile in the next few months, as I said, but likely this is a 2023 story. So very important story to follow here. So what to watch next week in Canada? We'll have the S&P Global Manufacturing PMI should be in the negative territory, in contraction territory below 50. We'll have the change in employment. Consensus is 22,500 jobs in September. And employment rate should be stable at 5.4. In the US, we'll have the manufacturing and services PMIs should be still in growth territory, but weakening. And we'll have change in non-farm payrolls, 250,000 in September. Unemployment rate should remain stable at 3.7%. So labor market still going strong in the US. So that wraps it up for the week. ia.ca/economy, your go-to webpage. You can subscribe to the newsletter if it's not done already. The In Your Interest podcast, we're getting very positive news about the listens and about the ranking on multiple platforms. So thank you to everyone out there listening. There's new material in the pipeline, so we're not going anywhere with that. We're going to be continuing producing content for years to come. So you're welcome to hop aboard. And Economy Finance 101, there's some new material that's being prepared. Twitter, LinkedIn, you can follow us there on social media. So I wish you all a very good week, and I'll be back next Friday with another edition of the Weekly Economic Review.